Did SpaceX just burst the AI bubble? Wall Street is getting nervous. The artificial intelligence boom has been the biggest story on Wall Street over the past 3 years, pushing technology stocks to record-breaking valuations and making AI the hottest investment theme since the internet revolution. But after SpaceX's highly anticipated public debut, investors are beginning to ask an uncomfortable question. Has the AI bubble finally started to deflate? Only weeks ago, the Nasdaq surged above the historic 27,000-point milestone, driven largely by investor optimism surrounding AI infrastructure, cloud computing, semiconductor companies, and next-generation software platforms. The market appeared unstoppable. Then SpaceX entered the public markets. Initially, investors celebrated the IPO, sending the company's stock soaring beyond $200 per share. The excitement was understandable. SpaceX represents one of the world's most valuable private technology companies, dominating commercial space launches while expanding Starlink's global satellite internet business. However, the enthusiasm faded quickly. Within weeks, SpaceX shares dropped more than 25%, surprising investors who expected another unstoppable AI-era success story. At the same time, the broader technology market stalled, with the Nasdaq moving sideways and many of the so-called Magnificent Seven, including companies leading the AI revolution, losing momentum after reaching their highs around late May and early June. A new rotation of capital. One explanation is surprisingly simple. For years, investors poured enormous amounts of money into AI-related companies such as NVIDIA, Microsoft, Meta, Alphabet, Amazon, OpenAI's ecosystem, and Anthropic-backed businesses. Now another mega-growth opportunity has emerged. Space technology has become one of the most attractive investment themes, and SpaceX's IPO offered institutions a rare opportunity to own one of the world's fastest-growing aerospace companies. Rather than bringing new money into the market, many investors simply shifted capital from AI stocks into SpaceX, creating selling pressure across the broader technology sector. This kind of capital rotation is common after major IPOs, particularly when the newly listed company commands a massive valuation. Government policy adds more uncertainty. Coinciding with SpaceX's IPO was another event that rattled markets. The U.S. government announced export restrictions on Anthropic's advanced AI models, Mythos and Fable. Although those restrictions were later relaxed, the announcement highlighted a growing concern for global AI customers. Businesses outside the United States suddenly realized that access to cutting-edge AI models could become subject to political decisions rather than purely commercial agreements. For international enterprises building products around American AI models, that uncertainty raises important questions about long-term reliability. Investors begin asking hard questions. The AI rally has been fueled by expectations of explosive future growth. Companies have spent hundreds of billions of dollars building AI data centers, purchasing GPUs, hiring researchers, and expanding cloud infrastructure. Now investors are increasingly asking, when will these investments generate sustainable profits? Are current valuations justified? How much future growth is already priced into today's stock prices? Will every AI company become a long-term winner? These questions don't necessarily signal the end of AI, but they do suggest that markets are becoming more selective. The next phase of AI investing. Rather than marking the collapse of artificial intelligence, the recent market pullback could represent a transition. The first phase rewarded virtually every company associated with AI. The next phase may reward only those capable of delivering measurable revenue, profitable AI services, and real-world business transformation. Infrastructure providers, enterprise AI platforms, robotics, autonomous systems, and specialized AI applications may now attract greater investor attention than companies relying solely on AI hype. SpaceX's bigger role in technology. SpaceX itself represents more than a space company. Its reusable rocket technology, Starlink satellite network, defense contracts, AI-powered manufacturing systems, and autonomous spacecraft operations position it at the intersection of aerospace, artificial intelligence, robotics, telecommunications, and national security. Many investors increasingly view space technology as the next trillion-dollar frontier alongside AI. What happens next? Whether SpaceX truly burst the AI bubble remains uncertain. A 25% decline in a newly listed stock is not unusual, and technology markets frequently experience healthy corrections after rapid rallies. However, the timing has undoubtedly shifted investor sentiment. If AI leaders quickly return to delivering strong earnings and accelerating adoption, this correction may simply become another pause in a long-term bull market. But if slowing growth, geopolitical restrictions, and tighter capital conditions continue, investors may look back on the SpaceX IPO as the moment when Wall Street transitioned from indiscriminate AI enthusiasm to a far more disciplined era of technology investing. One thing is clear: the race for the future is no longer just about artificial intelligence. It is increasingly about who controls the technologies that will power the next generation of computing, communications, and space exploration.